Well, good evening, traders. This video here today, I want to talk to you about trading futures. If any of you follow my channel, you know that I trade futures and options on futures. Okay, so one of the benefits of trading futures is a high leverage product, and I put down an example here of give you an idea of just exactly how high of a leverage it is. The big bond, first of all, this backslash here before quote means that it's a future product. You know, if you have like backslash ZB, it's bonds. If you have backslash ZC, it's corn. Backslash CL is crude oil. Okay, so there's always starts with a backslash if it's a future product. Okay, ZB, you can trade one strangle in ZB, and you have to put up around $3,400 of earnest money in order to trade this. Okay, if you sell the strangle, now that's going on about 45 days left in the contract, and selling the 20 delta strangle, that's short the 20 delta call, short the 20 delta put, you're going to receive around $1,200 in credit. Okay. The object here is when this days left in the contract gets down to 21, you either can close the contract out and roll to the next month, or usually a good rule of thumb is if you can buy it back for half the credit you receive, in this case, $600, it'd be a $600 winner. That's usually the rule of thumb to close options strangles. But to give you an idea of how much leverage this is trading futures, the strangle, TLT is a stock, which is bonds as well, but it's a stock you can trade on the stock market, and you can trade options on TLT. In order to get approximately $1,200 in credit off of TLT, you would have to trade 7 strangles in TLT. Okay. In order to trade 7 contracts of strangles in TNT or TLT, you'd have to put up around $19,000 versus a $3,400. So as you can see, it's about a 6.5 to 1 greater leverage trading the futures than it is over regular options. That's one of the benefits of trading futures. You can trade a lot of notional value with a relatively modest amount of money put up. Futures are liquid offerings. The contract backslash ZN, which is the 2-year note, trades over 1 million contracts. Matter of fact, today it traded, I want to say, pushing 1,500,000 contracts today. So they're very liquid. You can trade natural gas, you can trade, live cattle, live hogs, corn, soybeans, crude oil, and there's a lot of them. I typically trade foreign currencies and the bonds. Okay. You can also trade options on future contracts. And in a video that's coming up later in this series, I'm going to talk about using options to hedge. And I'll give you an example. Today, bonds made a pretty big move today because there was an announcement on the economy that it's not doing as well as people think it is. So the price of the bonds went up, which is inverse of the interest rates. So the interest rates went down to try to generate the economy, get it back going again. So the price of the bonds went up pretty good today. Well, after they rallied, they got up kind of high. I went ahead and sold a bond short. And it took a while for it to come down. Matter of fact, I sold it. The rally wasn't quite over. It went up about 7 or 8 ticks above what I sold it for. Well, on ZB, each tick is like $31.25. So my 7 ticks, I was down over $200. Okay, at that point, I went and sold a futures put. Future option put, and the reason I did that is a hedge. Is TLT or the ZB was going to continue to rally, the put would increase in value as the put is benefit goes up in price when the market goes down. Well, the market's going up. I was on the opposite side, so I was kind of losing money on my short ZB bond, but I was making money on the short put. Okay, so that's where you can hedge using options. Okay, now we're going to flip to the bad side. High leverage can work against you. I just talked about how I got in and shorted it when it still went up like 7 ticks. I was down $200, but before the day was out, it came back down and closed my position out. Okay, but the high leverage can work for you and it can work against you. So just be aware that it can go both ways. Futures are open 23 hours a day. At 5 o'clock at night Eastern time, they close for 1 hour. And then at 6 o'clock at night, they open back up and they trade again till 5 o'clock the next day. That can work. I know if you put an option, a regular option contract on, like we talked about TLT here, and you hold it overnight, you can sleep at night knowing that, hey, this thing's not trading at night. At the end of the day, if I was down $25, that's the worst it's going to be all night long. But with the futures trading 23 hours, some nights you can go to bed with a contract on, long or short, and you wake up at 2 o'clock in the morning, and the first thing you wonder is, am I better off than I was when I went to bed, or am I worse off? You have to be able to sleep at night, and it takes a while to get used to doing that when you have a futures contract on. Some brokers, you must put in orders to close daily. For example, let's talk about putting that ZB trade on today. I went short ZB, and I want to say I shorted it around noon, and then, matter of fact, that thing closed out about 10 minutes to 5. But if it hadn't closed out, my order to buy it back, let's say it hadn't got executed. Well, at 5 o'clock, that order, with one broker I have, that order stopped. It's thrown in the trash. Another broker I have, they allow it to stay on for, I think it's 30 days. Then they'll close it out if it doesn't execute. But with the broker I have that it closed out, in other words, you have to wait till 6 o'clock at night when the market opens back up in order to put that closing order back in. Don't ask me why they do it. That's just the way they do it. So I hope this kind of gives you an idea of what it's like to trade some futures contracts and some future options. Again, I tend to trade the currencies and the interest rates, the bonds. The bonds, they seem to kind of they trade like a wave in the ocean. They go up, they go down, they go up, and they go down, and they gradually, unless there's a big announcement like there was today about the state of the economy, they don't tend to navigate too far away, and they always tend to seem to come back. So it's I found it to be a relatively safe trade. Been successful trading them. So it doesn't cost nothing to watch and practice trade. But I've said this before in other videos I made. If you're going to paper trade, you have to be honest with yourself. Don't look at the price and say, "Oh, I'll buy it here." Then it makes a big move against it, and you say, "No, wait a minute, I wouldn't have bought it." If you say that, yes, hey, I am going to buy right here, paper trading, it has to be reality. So study the markets, and I believe that you can be successful trading bonds. ZN is a smaller bond. It takes half the amount of money to trade a ZN than it does a ZB. It's very liquid. You can get in and get out very easily. And like I say, it traded well over 1 million contracts a day. So take a look at that, and good luck to you out there.